Andrew Malcolm here, Mortgage HQ, and today we're going to talk about why people transfer their mortgage from one bank to another bank. Now this is often called refinancing, and it's triggered through what is usually strong secondary goals. People want to either restructure their mortgage to lengthen the loan term, which might mean 17-year mortgage goes to say 24-year mortgage, and that helps lower your repayment. It might be want to shorten your mortgage, so from say 28 years down to 18 years. That's obviously going to increase the repayments. It's going to incur a bit of time and effort on restructure. So people start to think, well, if I'm going to spend all this time and effort into restructuring, maybe I want to shop around and see if I can get a better deal. When we, as mortgage advisors, are looking to help people transfer their mortgage or refinance, just assess their options, we're looking for any debt that might be make sense to consolidate. We're looking to assess if there's any top-ups or renovations wanted. Maybe you want to buy a car, go on holiday, you want to access some of your home equity for that side of things. Banks are going to look at your applications and your situations in different ways. So your current bank might not be super helpful. Another bank might be happy to help. If you're looking at investment property, this is often a trigger for some people to consider transferring mortgages to other banks. Banks in particular at the moment are looking at rent in different ways. They're looking at borrowing power in significantly different ways from each other. Where you might be able to borrow $400,000 from your current bank for another property, this other bank might, through restructure and through assessing your situation in a different way, might allow you to buy an $800,000 property. So it's a very strong incentive to consider switching and transferring banks if one will allow you to buy the property you want and the other one won't. Now, if you're looking to help kids into property or get help from your parents, that sometimes can trigger a transfer from one bank to another where there's more favorable terms or a solution at that newer bank. And in particular, it's really good to assess banking products. There's some banks offer offset products that's a really awesome thing to consider if you have built up savings or a lot of money that's not really being put to work. Not all banks offer that. So assessing the banking products that you'd like access to, sometimes that will trigger you to maybe consider transferring a bank. Everyone they always want the best deal. All things held constant, if you're going to get lower rates, if you're going to get a cashback incentive, if you're going to get rewards on credit cards or fees waived, everybody wants to know about that, and sometimes that can contribute to triggering you to transfer your mortgage from one bank to another. The thing I want you to keep in mind as we close off is a mortgage advisor that's impartial, that can assess your options across all the banks and has got knowledge of products and options at all the banks, is going to have far more insight into what you can and should do versus the banker that you're dealing with that only really understands what they can offer at their bank and is very limited. So the person you're talking to at the bank will have a lot of knowledge that's deep just about their bank, but they can't necessarily give you the advice of what's best for you, because what's best for you might be to consider switching banks to get that debt consolidation done, switching banks to get that bank product that's not offered at their bank but it is at the other one. It might be that switching banks is 5 to 10 grand of benefit, but the banker can't recommend that. So it's good to assess if you can get what you want to get done at your current bank, because it might be simple, it might be quick. But if you've got a couple of weeks up your sleeve and you want to get financially the best outcome for yourself, it does make sense to consider whether you should transfer your mortgage or refinance, and make sure you get everything spreadsheeted all out by a mortgage advisor, that everything you understand, so that even if there's, say for example, a legal cost triggered from one bank to another, you're refinancing, there's going to be a legal cost associated with that. Just understand that the benefit that you're getting financially, and even if it's not a financial benefit, just understand the benefits versus costs, because transferring your mortgage is not necessarily free. If you like this video about refinancing or transferring a mortgage, don't be afraid to ask questions in the comments and hit subscribe. We'd love to answer more questions about refinancing and about your specific needs.